Hello, today we're going to take a look at the outlook for UK growth, given an economy that, as a result of Brexit concerns over the last 3 years and a slowing global economy, has started to show signs of underperformance, most noticeably in the second quarter of the year when growth shrank by 0.2%. What the prospects are for medium-term growth, given the ongoing political uncertainty in the United Kingdom, that it's very difficult for anybody to plot anything more than a very short-term path through, but also an economy that has struggled to generate productivity improvements over the last decade and has certainly faced a scenario where public sector spending, government spending, has been quite restrictive, titled austerity, but has certainly been a headwind to growth over the last decade. So the first thing to note really about the UK economy is that the fundamentals are actually quite strong. And when an economist talks about fundamentals, what do I mean? Well, I mean the demographics, the working age population growth, the business environment with a relatively attractive corporation tax and regulatory environment. Those kind of underlying factors are going to be largely unaffected by whatever the Brexit resolution is. And I think that is why investors that we speak to are taking a good look at the UK equity market, which is derated from about 14.5 times earnings just before the Brexit referendum down to just 12 times next year's earnings currently. And that valuation discount, about 20 to 25% versus global equities, is the reason why deep value investors are having a good look at the UK economy with those fundamental reasons why UK growth should perform well over the medium term. The second factor to take into account is that public sector spending, having been very restrictive for the last decade, is suddenly going to go on a little bit of acceleration. We're going to see public sector spending grow by more than 4% year on year in 2020, 2021. And then we're also likely to see at the start of November a budget from the UK government which may well try and lean against some of the uncertainty the businesses are feeling because of Brexit by cutting taxes, trying to boost the feel-good factor and effectively dispense with the government's economic rules and the target to try and reduce the fiscal deficit. And in this respect, fiscal policy in the UK is going to start looking an awful lot like fiscal policy in the US, where the Trump administration have legislated for deficits of 4 to 5% of GDP over the course of the next decade. You may well see a very similar fiscal trajectory introduced into the UK. And the final point I would make on UK economic growth and the growth outlook is that the UK economy has faced this fairly acute political uncertainty over the last 3 years. And at some point, the discussion will move forward towards the new economic relationship. And at that point, some of the latent consumption, some of the latent business investment, which has been moved to the right, has been mothballed as a result of this uncertainty, will be unlocked. And you will start to see some projects that have been delayed brought back on stream and start to accelerate growth into the UK economy. So I think, summing it all up, the UK economy remains somewhat of a special situation investment given the quite acute political uncertainty. But you strip those back, you look at the near-term policy levers and the long-term growth drivers, and this remains a very interesting special situation and one where the political future is likely to be a little bit more stable than the more recent past.